has brought with it some cheer for home buyers. Several banks have cut lending rates, bringing home loan rates to the lowest levels in 6 years' time. The rate cuts follow Prime Minister's appeal to banks to push credit to low-income segments. Ritu Singh joins in now with the details. Ritu, break it up for us and help us understand the implications of this.
You know, Kritika, right on cue from Prime Minister Modi's push to the banks, you first had the State Bank of India lowering its key benchmark rates by 90 basis points. This is the steepest rate cut we've seen by any lender in recent times. So now, effectively, their one-year MCLR rate has come down to 8%, the lowest in the industry. But of course, they were not the only one. They were the leader. And so the others have also followed. You had Punjab National Bank bringing it down by 70 basis points, Central Bank, Dena Bank, Union Bank, Kotak Mahindra Bank, IDBI Bank, many in the league who've also gone ahead and cut down their basis, their lending rates by anywhere between 20 to 45 basis points. But of course, important to know that the reason that these lending rates are really falling is because the cost of funds for banks has fallen post the huge surge in deposits following the demonetization days. That is not to say that these rate cuts would be temporary. We did speak to the chairman of State Bank of India, who also maintained that they may tweak deposit rates later to ensure that the interest rate regime more or less remains stable. But of course, in fact, another interesting point to note, especially in terms of State Bank of India, is while yes, the lending rates may seem very low at 8%, the spread on home loans has actually been increased to about 65 basis points compared to 25 earlier, which is why the actual pass on to customers is only about 50 basis points and not the entire 90 basis points. Listen in.
The spread is determined by very many factors, and for that matter our spread has never remained exactly the same. If that was the case, then there wouldn't be a spread, then you would just go by one rate. So we felt that at this point of time this is what we could afford, and that is the reason why this has been done. We will see what is the response to this. We are already far below the market, so we will see what is the response to this and take a call accordingly.
Okay, let's